All right. Good morning, everybody. So yesterday, Kansas got hit with a serious windstorm. Took our power out later in the evening, but before we actually went dark, we kept going gray. So I was losing internet through the day yesterday, losing power through the day. Really was untradeable. But while I was listening to Bloomberg yesterday, because I had nothing better to do, they kept saying this phrase that made me cringe over and over. We already know what they're going to do. It's what they kept saying before that Fed announcement. We know what they're going to do. And I even took the time to explain it to my wife. They don't know what the Fed is going to do. They think they know what the Fed is going to do. Now, this pop that we got yesterday, this is what we talk about when the investors are right and they're happy about it and they slap themselves on the back and they're proud. Like, yep, we thought he was going to do this. That's what he did. And yay, Bob's your uncle. And look at this beautiful move. Just keep in mind that all the things that made us sink that low, they're still here. They haven't gone anywhere. That whole new Corona, Omicron situation is still here. All of it, 100%, right? Every single thing. The only difference is we now have our forward projections from the Fed and their rate hikes, 3 of them next year, which normally would send the market into a tailspin. Telling them that you're going to raise rates generally doesn't turn out too good in the marketplace. Yet, beautiful move to the upside. So, take it with a grain of salt. Just this is not a long-term solution to anything yet. We don't have the ramifications of their announcement yet. This beautiful price action was nothing more than, yay, we went the right direction. Happy for us. So, there you go. A little bit of perspective. If they had been wrong, if the Fed had come out and said something opposite of what they had thought, yesterday would have been an absolute disaster, right? Because it's what we call getting caught off sides. If everybody thinks that something is going to happen and they all prime the trade or get in early and they're ready to go, and then it does the opposite of that, they have to unwind their positions and get in the other direction. And it can get very, very nasty, very, very fast. Today, 7:45, 8:30, 9:15, and 9:45, 10:30, 11, 11:30. Whew. It is a full day. Almost every single hour on the hour between now and 11:30 is some form of economics, including the jobless claims, production numbers. So there's going to be a lot of information coming out today and additional auctions at 11 and 11:30. So no lunch. There won't be a normal pause. There's not expected to be a normal pause at lunch. If you want to know these numbers today, Thinkorswim has that built in so that you can look at the Fed numbers. You can go to the Analyze tab, Economic Data, and you can type in what it is that you're looking for. So, labor force participation rate, for an example, civ part. There's your labor force participation rate. Or JITS Jolt, just sounds funny saying it. It's your job openings and your unemployment rate is unrate. You just type those in, or you can search for them here in the economic data search feature. It's not like we run out and make a lot of immediate trading decisions based on those charts, right? That's not the purpose. It's just being able to perhaps understand it from a more broad perspective. Okay, so the S&P set an all-time high again this morning. And to say that a little bit differently, because all-time highs sounds sexy and awesome and amazing. Like, yeah, all-time highs, baby. Let's say it's another way. Somebody went out today and paid more money for an ES futures contract than has ever been spent before. In the history of the world, nobody has ever spent more for a contract than they did today. Now, when you say it that way, who wants to stand in line? You ready to come get one? Anybody else want to get one? Who wants to be the one who buys at the most expensive that it's ever been bought before? It sounds a little bit different than all-time highs. Just means the same thing. Just a little bit of perspective. It is very likely to have one or two situations here. Either we break and set a new all-time high to the upside, maybe even tag the 111 on the Fibonacci. That would be one way that we could go. Or two, that we don't even manage to do anything more than just wicking into that Fibonacci level and just dumping right back out again. Could have swore I had a weekly expected move chart just ready to go. Nope. We'll do it the old way. Weekly expected move, as I mentioned yesterday, is going to be a little funny today because we could literally go from the bottom of the expected move to the top of the expected move in a day, in 2 days. So yesterday we went underneath the weekly expected move. We are now back above the weekly expected move. We're inside of it, I guess is a more appropriate way to say it. We're inside the weekly expected move. We're almost at the midpoint. And it is very likely that we close the week here. Thursday into Friday gets us there. That's the week. That's a wrap. I'm looking at a 1.83%. Check it on the ES, 1.6. So call it a 1% move, maybe even one and a dime if you want to get frisky. We can easily make that. The ES futures have an average daily range of 1.63%. It has an additional expected move right now of 1.64%. Now keep that in mind. They're saying that in the next 2 days, there is so much volatility anticipated that even though we started the week with an $80 expected move, we're going to add another $80 on top of that, and then another 80 on top of that. Yeah. And then we only have 2 days left. That number's supposed to go smaller, right? Not bigger. So if you look at the dynamic expected move instead of the static expected move, then you could say, all right, well, where's Friday? And then what's the numbers? For the futures, it'd be easier if you just look at the S&P, the SPX, the index. $44 from our current location to the upside, 44 to the downside, and then add in an additional $25 on top of that, up or down, between now and the close Friday. So they're still expecting a lot of violence and volatility and chaos. And of course, other than the economic events coming out on the books today, should be a fairly good trading day. A lot of institutions have been waiting for this data to come out to make an informed decision about where they wanted to rotate in the next few days. The MOC yesterday on the sell side was 125 and the buy side was 93. Usually when newer traders hear that number, they freak out and think, oh my gosh, I got to run out and sell everything. No, hold on. The sell side is big when they're rotating out of a sector to rotate into another one, right? They're not getting to cash sitting on the sideline. They're selling to rotate into something else and or have already rotated into something else, and they're taking profits off the table. So don't let that sell side number freak you out. But that was the MOC yesterday. For today's trading, it is a very large range that we have already set on the day. This is a very wide range. It is very likely to be the range for the day. I know it doesn't sound very exciting, but it could very well just be all of it right there. And it's not because they're not bullish anymore or that they're not happy to have been on the right side anymore. It's the idea that all of this is sitting waiting to come out. And this can really readjust their happy, warm, fuzzy feelings that they were so proud of yesterday when they were slapping themselves on the back and saying how amazingly smart they were for being right. So thesis A is going to be that we stay in the box. That would be my thesis, my bet, first bet. So like we usually do, if that's plan A, what's plan B? What if we leave the box? What if we leave to the upside? Where are we going? Well, it's all-time highs. When I say that the market moves from pivot to pivot 90% of the time, I'm serious. It's exactly what it does. 90% of the time, that's all the market does is move from one pivot to the next, one pivot to the next. 90%. You know what does the other 10%? It goes to all-time highs where it's never been before. When in that case, it is not moving to a pivot because there is not one out there. It's moving away from a pivot, but it's not moving towards one because there's nothing there. We'll have to use our Fibonacci values. The easiest way to do that would be the intraday measurements, because anything beyond the intraday is just going to be such a very broad Fibonacci that it's not even going to offer any value, right? Usually, if you go out to the daily chart and try to snap a fib, you end up with a level way far away and way underneath you, and then it doesn't offer any context or value. Still want to be able to answer how far away are we from the moving average? And are we getting into corrective territory on that number? So it's a very simple concept. When price outruns its daily and weekly 10-period moving average, it tends to pause there and let the market get caught up, let its moving averages get caught up, and then it continues on. If it doesn't pause, then it usually reverses to close that gap. And we can look back on a day-to-day basis and ask, well, how far away are we from the 10-period moving average? Because if we get too far away, the 10 is that blue line, we get too far away, we are likely to stall, go sideways, or pull back and get the 10 to get caught back up again. And we can annualize that and average that out and look back. And each product out there responds differently to how far away from its 10 that it is. So we can see that we're at 2.4. We've been higher than that before in a very bullish run here off of those lows, right? When we were trying to complete the head and shoulders pattern back here, inverse head and shoulders. So there has been times where we made it into the 4s and the 5s, but generally speaking, somewhere around 2 to 3% is the turnaround point where we pause, stop, right? And it's where we start asking the questions, what's more likely, that we hold the range here or, continue from here and go higher, go lower? So if we are to break to the upside, use the Fibonacci values. They're going to be the ones to offer you some intraday targets. I don't expect to have a very clean trend day. I think if it's going to be bullish and make those upward moves, it's going to be either what they call parabolic, something that looks a bit like that it will explode at the open, rip to a certain level, and then just stop and go sideways for the rest of the day. Or that it'll be choppy, slow grind, giving us new highs through the economic events that keep coming out all the way through the morning until, well, there really isn't going to be a lunch today, but until those auctions perhaps this afternoon. Don't forget these, right? These are going to be very important today. I didn't talk about the alternative. This one. What happens if we go down? Like we are doing right now, we will get through the last peak. We'll deal with the initial balance high, and we would fall through this area very quickly since there are no volume nodes there. If we were to turn on the volume profile, we would see that it's very shallow in that area. So we have a lot of volume support right in this area, which makes perfect sense. And after that, it gets very, very shallow. And we don't start seeing any support until we're down around this area here. Now with those indicators missing and looking at the box that I drew, you can start to see the various levels we would hit on the way down. All right, same thing for the NASDAQ. Weekly expected move is in play. On a lot of products out there today, guys, this thing is in play. So you can see that the NASDAQ is struggling with this critical level. First touch, you already missed it. Would have been a trade opportunity. Touch one, touch two, both of them. You can see we did make it through. So, if there was any liquidity there, I'll put a big if there was, then there's not any more, right? Because we've wiped it out. It's gone. So, being the difference of orders on the dome versus now those orders are gone and it's volume nodes. So a break to the downside would resolve the Globex pivot, this little pivot minor. Through that, the Globex low. I would expect that we fall through this area relatively quickly if we were to break from the downside. I'm not bearish, by the way. I don't think we're going to break to the downside. I don't think we're going to break to the upside either. Right? I think it's given us what it's going to give us. At least in the futures. Oddly enough, we've been seeing the SPX and the INDX not exactly in step with their futures indexes. It makes sense. We're trading March futures and we're trading in the SPX right now. Big difference, right? For the SPX, it's very likely we hit the upper edge of the weekly expected move. In the ES and the NASDAQ, I'm not so confident. So that's our downside break. We got an ADR of over 2%. So even though the NASDAQ this morning is up more than 0.5%, it still has 1.5 left that it could go. No market maker move on this one. The range for the Globex, it doesn't seem like much when we're looking at what we did yesterday, but the range for the Globex is really big, right? We went from basically 280 to 380, past that to 440, right? So that's a very large Globex range. It's very likely to be the day right there that we just stay in this from high to low. And because of the economics that are coming out today, that it goes violently through these back and forth. It would not surprise me even in a little bit. Keep in mind that, finance was on the table yesterday. I kept trying to point people in that direction, tell them, watch those bonds, but watch the dollar. Look at what's happening yesterday. And there wasn't no reaction, right? Well, we're certainly getting it now. So while I've been streaming, there we go in the bonds and in the dollar. So yet again, guys, keep your eye on those financials today, right? The NASDAQ 100 does not have financial names. The S&P does. We don't want the bonds to move around up or down, right? We really want them to stay pretty centralized. And when they do make moves, we want them to be gentle, not crazy wild swings. And the reason should be really obvious. One side or the other would get whacked, right? When interest rates go up, banks love it, tech hates it. When interest rates go down, tech loves it, banks hate it. So, if this thing makes exaggerated moves in either direction, one of these two indexes gets punched in the face and the other one gets a helping hand. So we don't want to see this thing make exaggerated moves at all. We just want to see it make, consistent, persistent price moves, a grind in a particular direction, or even better, just stay sideways. When it comes to the dollar, we're always wanting to ask the question, why is it moving? Who's buying it? Why are they buying it? Is it reflecting the VIX or not? And we can see that it's not, right? It has like a complete disconnect at the moment between what we see in the VIX and what we see in the dollar. If I was to gauge this for a risk on or risk off situation, this would seem to be a risk off situation. All right, you can see all of the sectors are lit up. Airlines are leading the way. Cloud computing, energy, finance, emerging markets, and technology. We need finance and tech to have a good rally day. We need both, right? We've done it before with only one, but we really need both, especially when you start combining things like fintech, finance, and technology names combined. The weekly options list, these two watch lists down here, they're really just one really big watch list, but TrendSpider won't let me make one really big watch list, so I had to make two smaller watch lists. On a day where we can't lean into the sectors, this is my go-to. It's my backup, right? This is when I say we have to be stock pickers and actually go out and be very specific and try to hunt down things that aren't connected to sectors and subsectors and industries. We don't necessarily need these today. We should be able to lean into the sectors. It'll be the bigger names in those sectors, right? And I make my own sector names a lot of times, like chips, right? I just make my own little micro index, go in and put in the chip names that I would consider to be of importance or have weight. And I name the list chips so that I can say, well, what are the chip sector doing today? How are those chip names doing? A lot of these chip names are the same names that are in the crypto fund, by the way. Something to think about. But they're looking really good this morning. We got a lot of names that are up. To me, it needs to be up at least 0.5% in the pre-market if I'm going to even consider it. And I'd say half the list is up more than 0.5%. The airlines, which, this was a little shocking unless you think about, borrowing rates and getting something on sale, value versus growth, all of that. If they do get 3 opportunities to raise rates, that's obviously going to be negative for technology names that are, like their multiples are insanely high. We would see a rotation perhaps a bit away from the tech side and into these other names. And that could explain a little bit of this on the airline side, but only a little bit, because it really doesn't make sense. The same Omicron fear that we had on Tuesday is this, it's still there today, right? And no news has come out to abate that situation. So what the heck are they doing buying the airlines? They dumped the airlines 2 days ago when they started hearing about travel restrictions and, imposing lockdowns. And so it just, a number of ironies out there right now abound, and we need to be cautious when it comes to day trading, though, right? The bigger picture often fades into the background, and it just comes down to, can I make a trade from A to B and make money? And if the answer is yes, well, then that's what we focus on. I mentioned them, so we'll take a peek. The crypto names. And I did see an analyst say that one of the reasons that crypto got whacked back in the last month or so is because it is more traded now by institutions and is more correlated to the global marketplace. That's one of the reasons that it had done so good, and it's now one of the reasons that it wasn't doing so good. And they said, you don't get the good with the bad. The shock and all part of it was the depth and scope of and the speed of the move in Bitcoin. So yeah, it's basically a product that is that you go in stop free, or that you use disaster stops in. I don't trade a lot of crypto. I do more buy and hold than trade. And when I do want to trade crypto, I use Tastyworks futures in the smalls account, right? That way I can short them or go long, no problem. If you can't short crypto, if the only thing you can do on your platform is buy, think of how limited that is. You're always stuck with one choice. You can buy or you can stand aside. That's it. You can't short them suckers. That's why I like having the futures crypto where I can go long or I can go short, and I can have more than one-sided price action trading. A lot of these restrictions on options traders like Webull and Robinhood, those are all traders that can only do one thing: buy options. Just think about that. That's the only thing you can do on there. If you're a Robinhood trader, you're almost exclusively just buying options, which is really awesome for people like me who sell a lot of options. You want to buy an option? I'll sell you an option. All right, something wrong with my pot list. It's not working. The EV names, they're either flat or positive. TrendSpider is broken. Yeah, it made it. All right, EV markets are up, fairly significant. 2 are less than 0.25% or less than half, and a couple are flat. But those flat names, they're like they're on the edge of the beaten path anyway, so not much of a surprise there, right? But if you look at your more popular names, Lee, Ride, LCID, XPEV, Tesla, NIO, they're all looking extremely well. Even Ford, right? So it's going to be a little difficult to try to find some red to greens. It's that day trade setup that I like so much. But it shouldn't be that hard to find, say, inside days. So for those of you who are looking for day trade opportunities, energy is, of course, on the table again. Energy and finance are tightly correlated. And if we're going to be looking for trade opportunities, it may come from the energy and finance area, right? This doesn't really fit for a red to green that I would want to trade. The tail's too long across the bottom side. But I mean, if it's especially 3 days down in a row and that we're outside of the weekly expected move and we're just looking to get back inside the box. There are plenty of energy names that are not very expensive, have weekly options, are very, very liquid, and would be great to trade, right? Even fun to trade. So energy, finance, there's a lot of financials that are tradable that aren't overly expensive. Um, we may not find really good red to greens to focus on, but we could certainly find inside days. What I'll say about an inside day is the size of the shadow candle matters, right? When you have a very, very large shadow candle and then multiple days in a row that we stay inside of it, who cares? The shadow candle is so huge, it's very likely that we're going to stay inside of it for many, many days. But when you have a very small shadow candle and then you have multiple days in a row where we stay inside of it, that is a wind up, and you're looking to see a very large breakout. When the breakouts come, it's often a 4% move. And a 4% move means that you can target the options that you buy out of the money at around 2 or even 2.5%. Then you're buying options for $8, $10, $12 a piece, looking to make 100 and something on each one of those. So you buy 10, 12, 15 options, you spend about 100 and something dollars, you get that move that you want, fading out of the play as it goes so you can lock in profit and stay in the trade and give it the room that it needs to run, net some really nice gains without having to go in and trade something crazy expensive like $1,700 calls and puts and then freaking out the whole time that you're in the trade because you know that you just bought a $1,700 call or put. Yeah. Okay, guys, that's what I got. Be careful, be safe, and I will see you all tomorrow.